Tesla ended up closing flat today, and I'm still holding my December 15th put options. I'm going to explain in detail why I'm still holding them, what my target level is, and why I think this is such a good setup and a good opportunity. If you guys want to follow along with all my trades, I do throw them over here on my Twitter account so that you can get access to all of our information much quicker than YouTube. And we have a Discord community with over 12,000 members that you guys can use. All of those links in the Discord. Let's talk about technical analysis first on Tesla. Right now, you're going to notice that we're sitting up here right at this level or point of interest at about $220. At this moment, yes, we are trading over $220, which is a very strong resistance level and a key level as well. But the thing you have to understand is that we have not fully confirmed to take that level out. A lot of people will use price specific targets like $220, and usually newer traders will think that, oh, it's over this level. It's time to buy long. It's time to move up to $240. And the truth is you should be using resistance price levels as what they are, a level. And for me, I like to draw out a horizontal block so that I can have a better understanding of maybe what that range might be. My initial reasons to go short is because we had a break of structure right here at $202, and it looked like if we were going to hold under $202, we could see a pivotal move back down to $183, which is what we were talking about in the past couple of weeks. This pattern plays out about 80% of the time, and we started to see a retracement back up to $212 and $216. I began shorting around $212.50, and I began to add into my position up into where we currently are right now. My plan is to close my position if price closes over this level. As you can see here, we have been over this level a couple of times in the past week, but we have not closed over it, which is pivotal. One of the things that you need to understand if you're a newer trader is that the only thing that matters a lot of the times is where your candles are going to end up closing, especially if you're trying to build a strategy or an edge or some type of trading bot. It's very important to understand that a lot of the times you're going to be wanting to watch candle closures. So if this thing rips up tomorrow with good volume, then I'll just close out my trade. If it closes up around 225 and the on balance volume, which is this line here, continues to rocket up, then I know that this has enough volume to move up through that level and probably begin to send Tesla back up to $230 and $240. The one thing that we do have to understand here, though, is that as Tesla has actually been hitting these higher highs, the on-balance volume has been making lower highs, which is not a good sign. In order to take a resistance out, we need volume. We need buyers to come in to take that level from us. So at this point, going short here, setting a stop loss at about 225, 226, and a take profit down at about 190 to 180 will give you an insane risk versus reward. And while there's probably only about a 40-50% chance of this occurring at this point, the outsized return is absolutely insane. Now let's talk about unusual options flow for the day. Over on my Twitter, I post all of the unusual options flow that I handpick from the day, as well as the highest calls and highest confirmed puts. And the thing that we have been noticing is that Tesla has been very, very weak for the past couple of days. It seems that big money is not buying bullish options into this resistance level of $220, which is another reason for me that it's showing a bit of weakness. Now, of course, if this changes, if we begin to see actual volume on the on-balance volume like we talked about earlier on the technical analysis chart, and we start to see whales come in and start buying, options up, then I'll say it's time to cut my position. But I'm not going to get upset about it because at the end of the day, it was a great position to take, but not all positions are going to work out. Now, if you direct your attention to the bottom left side of your screen, you're going to see a couple of sections that are very important on black box stocks. And I talk a lot about unusual options activity on this channel, but what's more key and honestly the most important thing is learning how to read them correctly. When you first start using flow, you will think to yourself, I can't believe I've never used this before, and I'm now going to be able to see every single transaction that comes through, and I'm going to become a professional trader. I'm telling you, most of the time, that doesn't end up working. The big guys know how to hide their actions, and if you don't know how to decipher this information correctly, which is why I post my personal picks on our Discord community, and then also a little bit on our free Twitter, is because it's very important to understand how to interpret this. And we're going to explain a bit about this. So if you guys have been here before, you're going to get a little refresh. And if you haven't, you're going to learn something new, but something that a lot of people don't talk about, especially on YouTube. So when you hear the word flow, I just want you to think of an order, a very big order that came through from probably an institution, which a lot of people say whales, but a whale is just a big buyer. They are somebody who can drop into the ocean and make a massive wave. We would not be a whale. I would actually consider myself a dolphin trader, and that's an actual thing, which I could do in the future. But a whale is somebody who can actually come into the market and move the market itself. So whales are usually going to be institutional investors. These could be people who also are hedge fund managers and run hedge funds. These could be investment groups who run their own funds, like investment banks. And this could just be somebody who has a shit ton of money and they're a massive trader with 20 plus, 30 plus, 40 plus $1 million. And depending on the market cap of the company, maybe they can move a stock, but a lot of times they're not going to be able to. But the options market is different. And without going too into detail about how options work, because I have a video in our Discord community, which is free, just go over there, go over to our courses and seminars section, and you can take all of our options videos, which will teach you guys everything that you need to know about how to trade options. But essentially what we need to be looking for is unusual buying and unusual selling. And the issue is that a lot of people, especially when it comes to Tesla, because there's very big numbers that get thrown out there, they will see big numbers every single day, but they will not get an actual understanding or a clear picture of how that flow was painted. So if we look at the bottom left side of the screen, you're going to see the most active calls for the day today. Tesla was 17 million, which is very, very small. Nvidia with 22 million, which is very, very small. And then BP with 46 million, which is still very small. Most active puts is going to be Tesla. Massive here. We're going to talk about this in a moment. That's an insane number. ZM with 272 million. That's a lot. And Enphase with 164. Now, what this is not going to tell you is if these were bullish or bearish. Because if you're somebody who understands the basics of calls and puts, you understand that calls mean you think the stock is going to go up. And when you hear puts, you think that the stock is going to go down. But you have to remember that there is somebody, if we look at this heat map here, on either side of the transaction. If you decide to buy, somebody is selling to you, okay? Even if it's a market maker, somebody is selling that transaction to you. So if you're buying a call on Tesla and you think that Tesla is going to go up, somebody is selling you a call, meaning that they think it's going to go down, which is very important because people will see this number on Tesla and think now that there's a ton of people loading up on puts. And I'm not saying that they're not. The problem is that if we actually move over to the bearish flow, these are the confirmed options. And this is all we care about. And I'm going to explain very quickly what a confirmed and unconfirmed flow means. But you can see that these numbers are different. Tesla only has negative 15 million, and with bullish flow, Tesla is nowhere to be found. So to understand a confirmed versus unconfirmed flow, we're going to resort to this heat map, which is going to be this middle thing right here. It kind of looks like an Excel spreadsheet. If you look here, this is going to be an options chain. The left is going to be calls, the right is going to be puts. Any of these that are colorless mean that we don't know if it was somebody buying a put or selling a put. For instance, we have so many puts that came through today, if you see at the bottom left side of your screen of Tesla, but we don't know. This could be people selling cash secured puts. So we could think to ourselves like, oh, people are buying puts, but really it could be a hedge fund selling $200 million worth of cash secured puts on Tesla at $220 because they want to enter a long-term position down there. And that's usually how they're going to enter their institutional prices and in their institutional positions, because they're going to make premiums every single week just selling cash secured puts or selling covered calls. So it's very important to know that if it comes in on the bid or on the ask or below the bid or below that or above the bid or below the bid, that it's going to be confirmed. And confirmation of flow is the only thing that we can trust. If it's unconfirmed flow, we could be fooled by randomness, and it could help us in the short term because we see like a ton of puts coming through. Tesla's also up at this big resistance level. It's also sitting here that when this support level is broken and all these things that look like we're going to see a pullback, a dead cat bounce, etc. It's just telling us that, yeah, there's a chance that this is true, but we don't know. And so we don't care about it. But what we do care about is the insane amount of covered calls that have been happening on Tesla. We had $229 million worth of covered calls that were sold on Tesla 2 days ago at $222.50 and $223.33. This means that a big whale, probably an institution, does not believe that Tesla's going to close by this Friday above $222.50, which is very, very bearish. And if you look, this is 15,000 contracts sold, covered calls, this Friday at $222.50. So if I were to assume, I would bet tomorrow, at least tomorrow, definitely Friday, that Tesla's not going to close above $225. What I think is more realistically going to happen here is we're going to reject, we're going to fill the gap back down to 205, and most likely, I hope we move down to 185, but most likely after we fill this gap, we'll probably move our way back up into 255. I think that we should probably see 180 taken out, but I do think short term we at least get this 7% pullback to $205, and the flow is also supporting that. Now, as I've said before in the beginning of this video, does it mean that Tesla's going to reject? No. You know, as traders and as investors, our goal is not to predict the future. I think of myself as kind of like a lawyer for my money. I have to, in order to get my money to go out there and work for me, I have to present a case of why this is such a good setup, not why it's going to work, but give all of this information and present my case as to why the cash is worth risking. And when I look at all this, I say to myself, it's more than worth risking when it comes to Tesla. And the other thing to look at too is just going to be the S&P 500 overall. The S&P 500 has had a massive run as well, but it's looking like we're probably going to pull back. At this moment, we are still over the 200 SMA, which is very bullish. We are also up over the 50 and the 11 SMA, and the on-balance volume has done nothing but go up. So a lot of money has obviously been coming into this push. But just like Tesla, just like a lot of these other stocks that we're going to cover today, we're looking weak right now. We're pushing up into this bear order block on the smart money concepts. We're looking like we're going to start to reject here. And it seems that just like Tesla, I think we're going to pull back and fill this gap to 431 and probably fill this gap back down to 422. Now, if you're part of my academy and the premium Discord community, you know that I do have a big December put open for SPY. I have a big QQQ put open, and I also have a big Tesla put open. And I'm not expecting now at this moment the move all the way back down to 407, but what I am expecting is at least this rejection and the move back down to $422. And if that occurs, what that will most likely set us up for could be a massive run into December and into January, moving us all the way back up to potentially $484, because this could end up being that inverted head and shoulders pattern, which is one of our favorite patterns to play, if we end up rejecting and testing our level back down here. So I'm thinking in the next month or so, rejection here in the next couple of weeks, pull back down to 420/422, potential bounce, and then I think we maybe rally going into December. But the S&P 500 at this moment is a little weak. There is a chance that we could just continue to rally, push right through this order block, come back up and, hit up at 447, but I just don't see that happening this quickly. I just feel like there's so much pressure up at these higher levels of 460, 448 that with how, yield inversion still happening, we still have obviously inflation we're combating. We have a Fed who's, in my opinion, still talking about December potentially being hawkish. I just don't think that we have enough to push us up to all-time highs quite yet. If we see this pull back and we see some more economic data come out that's very good, and we see this pull back down to 422, and it seems like into the end of the year that we're going to rally, great. But I think that right now the time to potentially go short is not a high conviction one, but I think that it's more than worth the potential trade, because you're sitting at like a 6-to-1 or 7-to-1 risk versus reward. We covered QQQ a couple of days ago, but you can also see that this is setting up just like the S&P 500, pushing up right into these resistance levels. We have the smart money concept level here at about $375 up to $378.25, as well as this one down here at $367 up to $372. Now, the one thing that is good that we're pushing up into this level is that our on-balance volume is making a higher high. If this wasn't, it would definitely be showing more weakness and that we probably won't take out these resistance levels. I'm thinking that we will see, just like I said, potentially with SPY, maybe a try of another push to all-time highs going into December and the end of the year. But I think that we're going to get one more retracement, one more pullback, and one more gap fill down here at 357.05, which if you think about it, we've rallied nearly 10% in 25 days, or I'm sorry, 10% in 12 days. A cooling off back down here wouldn't be bad at all. If we take the fib and we do a fib pull all the way up, you're going to notice that that would also line us up with the 0.5 Fibonacci, which would be a solid time to go long and move our way back up to 380. So I think that we have a really good situation happening here with QQQ. And I think that if we were to take out this 375 level and hold, then we could maybe move our way back up to 382. But at this point, the risk versus reward to the upside is just not worth it. And the risk versus reward to the downside is most certainly worth it, even if there's probably a 40% chance that we pull back. But I do think we'll at least pull back in the next couple of days to $364, and we can come back and assess those levels from there. So if we zoom out and we look at Nvidia, obviously this thing has been absolutely insane. Back when we were pulling down here around 390, we were talking about this order block, and if the block was broken, how we can see the move down to 304. Obviously, since then, Nvidia said, hold my beer, and literally ripped 18% within 8 days. But now we're moving up into this level of about 465, and you can notice that there's a lot of selling pressure coming up here. We have a big order block from 463.77 up to about 480, and then another one from 485 up to about 500. I think to be entering here is not worth it to the upside. If you're already in and you want to allow this to continue to run, you can most certainly do it, but the fact that we have, deviated nearly 10% away from the 11 SMA means that there's a very high chance that we're at least going to whip our way back down to 440, and I think that this is a really solid short to put in place. What I'd be looking to do is enter here short, setting a stop loss up here on a higher high, and a take profit somewhere down, if you want to be conservative, somewhere around 440, but I'd be saying to fill the gap somewhere down around 423 to 420, which will give you a 3-to-1 risk versus reward ratio. Now, the other thing to look at too is if we do a fib pull down here, you're going to notice that our golden zone would fill back down to this gap and then probably move our way back up. So I think in the next week or so, we're probably going to end up seeing Nvidia pull back down to 440, 430, and the area that I'm really looking for is going to be $420. So I am going to be looking to go short on that in the next couple of days, in addition to all the other short positions that I currently have open. I hope that this video helped, guys. Hit the like button, comment, share this video. It'll always help the channel grow, which means a lot to me. If you want direct access to all of my trades, you can go and check them out in our Discord community, and it's $50 per month. You guys get access to all my trades, all my trading bots, swing trades, day trades. We have everything for all types of traders, and honestly, we've put our heart and soul into this company, and what we plan to do in 2024 is massive. If you're somebody who doesn't want to put the $50 up and you feel that I just want to make sure that these people are legit, follow me on Twitter. I throw out tons of trades, tons of trade ideas, hand-picked flow. Like, the amount of value that we give away for nothing is massive. All I ask is that if you ever find value, just share us and push it out to other people. Thank you guys for all the support. Thank you as always. I'll see you tomorrow. Peace.